Good morning. This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is December 11th, 2023. This week we get the Consumer Price Index, the Producer Price Index. We also get to hear from the Fed at their FOMC meeting, the last one of the year. Plus, we also get some new AI data to find out if it's translating into sales. So let's jump on in.
Okay, let's go over last week's market recap. The major U.S. stock indexes recorded their sixth positive week in a row, although momentum continued to slow with the S&P 500, NASDAQ, Dow, and the bond market each recording a very fractional gain for the week. Friday's S&P 500 closing level was the highest year to date, still under 2 years, but the highest year to date. Bitcoin. Price of Bitcoin, the most widely traded cryptocurrency, jumped to its highest level since April of 2022, where on Friday it traded around 44,000, up more than 13% for the week, and above a recent low around 25,000 on September 1st. And going back to the beginning of the year, it started out at 16,000. All right, let's talk about our market headline number 2, which is the ISM services. November came in with PMI up 52.7 versus 52.3 and 51.8 the month previous. New orders were the same as last month at 55.5, and business activity was slightly stronger, coming in at 50.7. Headline number 3 and the big market mover was non-farm payrolls, and the job growth figure came in at 199,000, slightly above most economists' expectations, and extended a recent run of moderate but solidly positive labor market momentum that we have seen. And even though it was slightly above last month's at 150, it's still below its 1-year average at 240,000. The unemployment rate slipped to 3.7 from 3.9 the previous month. And here's a chart to go over that. And this last month now makes it 22 straight months below 4%. This hasn't happened since the 1960s. The unemployment rate was never below 4% in 1970s, 80s, or 90s. It did in the 2000s or 2020s, and that was COVID-based. So I don't know, this market is stronger than anyone anticipated. We may not see this type of market for a very long time. And here's a pictorial of the Fed raising interest rates, and it's not even budging the labor market. And even though it's a lagging indicator, it's still not moving it whatsoever. All right, let's take a look at the equities in the form of the S&P 500. On a short-term basis, we are just tapping the top end of this resistance zone. It's in about the 46.30 range, 37 range to be exact. And so we'll see what happens this week, as the market will probably digest a little bit and take a breather. However, if we do break it, I'm going to show you here in a little bit longer term, it could be off to the races, because you're going back all the way to March 2022 at that 46.37. And then we could be looking at all-time highs back here at the very end of 2021 at 47.93. All right, let's take a look at bonds. And we also went to add mode on November 7th and have had a nice run. It actually turned the bond market index positive for the first time in 3 years. We shall see. We got 3 weeks to find out if it's going to continue to hold that positive result. All right, here are the top 3 market movers for this week. On Tuesday, we get the Consumer Price Index for November, and then the FOMC starts their 2-day meeting. On Wednesday, we get Adobe earnings, and we get the first report and see if AI is converting to actual real dollar sales. And so that'll be a very important one to watch on Wednesday. And then, of course, we get the FOMC interest rate decision, and there's a 98.4% chance they do nothing. So anticipate a lot of talk. But again, they will be listening to what Powell says during his conference. On Thursday, we get the producer price index for November and retail sales. Here is a listing of the corporate earnings. And like I said, Adobe will be one to watch on Wednesday, and then Costco will be the other big one for Thursday to get a feel for the consumer. All right, that's it for this week. Thank you for joining us. Our next update is Monday, December 18th. As always, continue to subscribe, like, and follow, and we shall see you next week. Have a great week trading.